All right, guys, I hope you guys like this video. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I'm going to go over the earnings report with Tony DeNiro. Now, Tony, I know you have your own channel, and you don't even say my name on your channel. You call me MR. It's okay to say Marantz Rantz. But I do give you views, young man, and I watched you. And I watch you do what you do best, and it's control a FUD, control the information, and it's absolutely criminal. And I'm going to show the world right now. Well, the world, I'm just going to show a couple of hundred people because not the whole world watches you. But I got you. Guys, pay attention. This is criminal. Babe, but guess what? I'll talk while he talks. Don't worry. Tony, I'm going to push play on you now. You're sucking on a cold one. Let's do it.
All it takes is those swaps to go the wrong way.
Oh, and you're vaping. This is great. This gets better.
All right. Let's talk about the earnings. This is, don't let your eyes glaze over. This will be pretty quick. I'm going to do the Reader's Digest version. There's no gotchas in here. But just to do my due diligence and stick with what we do here. I was going to try and zoom it. Oh, here we go. All right. So these three columns we have here is the quarter that just ended, the quarter from a year ago, and the quarter ending January 29th. I'm mostly going to be focusing on this first quarter, and I'm not going to talk about every line item. Don't worry. I'm going to give you the abbreviated version. But cash and cash equivalents a year ago was 1.4 billion. Cash right now is 800 million plus 238 million in marketable securities. That basically gives them about a little bit over $1 billion in cash. All right. There are other things, inventories and stuff, but obviously, since they're losing money, just like AMC and many other companies that
he said at the beginning of this, he wasn't going to compare AMC and GameStop, but he's doing that right now. Additionally, whenever you're going to compare cash and cash equivalents, you'll see that we have $1 billion and we're about 200 less billion than we were in January. And by that being said, we actually have 200 more $1 million in inventory. So it's just putting the money in the right section in the right quarter to get ready for the right thing, which would be quarter four. But it's okay if you don't know how to read it. We'll keep going.
You might be following. If they're in a negative earnings situation, they're losing money. You want to know how much cash do they have and how long can they survive on it, all things being equal. So they got a little bit over $1 billion in cash and cash equivalents, including these marketable securities. And I guess you could add receivables in that too. Current liabilities is mainly in accounts payable and accrued liabilities. I'm going to show you guys where gift cards come in as a liability account too, because I always tell you guys gift cards don't go into income when you buy them; they go into a liability account. AMC has a page where they show that, and so does GameStop. So as we zoom down through this real quick, I'll just highlight what to look for if you ever want to go find it. Total liabilities, including accounts payable and accrued liabilities, current portion of operating lease liabilities, and current portion of long-term debt, basically comes down to $2 billion. And total liabilities and stockholders' equity, $3.3 billion. All right, so that right here matches this. Now we go down to the statement of operations. Net sales, $1.18 billion. The only thing really worth noting on here is it is lower than it was a year ago. So October a year ago, they actually had more sales than this year. I would prefer, as anybody would when you're looking at a company's financials, that every quarter the net sales go up. And that is just, I'm not going to do this is not a GameStop AMC comparison, not by any stretch.
Sounds like it.
But when you guys hear me talk about AMC, the overall trajectory of the revenues is going up, that's what I want to see. And I will point out to you, if we start having quarters going flat or negative, that is a potential problem. This is just a very slight difference, but I would prefer to see this number higher. Cost of sales, 900 million. So to sell 1.1 billion, all of the costs that go into that were almost 900 million. Gross profit, 291 million. You heard him talk about the SG&A, the selling general administrative expenses. That was 387 million, or about 32% of the net sales. That gives them a net loss of $94 million. So what does that mean? If they're losing 94 million in the quarter and they have 1 billion-ish in cash, let's just say $1 billion and 100 million, they easily, if nothing were to change, have 10 quarters worth of cash to survive and do this plan.
So he says they have 10 quarters if all things being equal, but all things are not being equal. And the reason for that is, you know that you're in quarter 3 where they actually increase inventory spending for quarter 4. You see, GameStop does 40 to 45% of all their business year round in quarter 4. Unlike other companies, you have to understand the cycles here. So you just can't pick and choose the one quarter like this one, quarter 3, to say, well, they lost $90 million. And it costs this much, and this is how much cash they have. Because quarter 4, if we just go off that metric, well, then what? Every quarter is going to be quarter 4? You're going to see a crazy number quarter 4. I already told you. But what he's not pointing out, and he's going to try to point out right now, is, and we'll talk about it, watch this.
So no immediate risk. If everything stays equal, no immediate risk of GameStop going bankrupt.
Yeah, we know that.
Net loss was 31 cents, and that was an improvement from a year ago at minus 35 cents.
So not only was the net loss an improvement, it was more than triple a year ago, and or at the beginning in January, more than double. We went from $1.19 loss per share, 82 cents loss per share. We're now at 31 cents loss per share. It's going to get even better. It's going to get even better and better and better. Certainly when you go apples to apples, inflation versus inflationary number, you annualize on those numbers. You just don't know it yet because you don't know business. But you think you do while you sit here and you read this. But let's keep going. This is the best part.
Cash flows, I'm just going to skip that. Not my strongest analysis.
Cash flows, I'm just going to skip that. He's going to skip the part where it shows you that GameStop has an increase in free cash flow, $177 million. Have you guys figured this out yet? It was the most boring video up until about right there. I was listening, I was falling asleep. I was like, oh, he's just going to read the damn thing line by line. Doesn't understand anything he's reading. He doesn't understand that the operational debt went down $50 million from last quarter to this quarter, or last year to this year. We actually are on a smaller footprint. So when the sales numbers look smaller, as you say, smaller, and you don't understand that we have over 2,000 leases that are up within the next 2 years, the next year, I apologize, in the next fiscal year, 12 months, you have 500 this year, 1,500 next year. You tell me, how many leases are we keeping? How many buildings are we closing? So when you close them, yes, your revenue is going to go down, but your operation gets better. You get more nimble. This is called cutting the fat. That's what they're doing. But hey, you want to skip the cash flow part? Then keep talking.
I want to show you the
we know about the damn
stuff, but I want to show you before we.
About the gift cards. I know, Tony.
Issuances of
we get it. Just keep passing, because I want you to say the dumbest shit ever. Where he says
251 million in
GameStop,
probably treasuries.
Not that big of a deal.
That was up there at the,
it's losing money. It's not making money.
Sheet in non-cash securities.
I'll just stop it right there, because it's absolutely embarrassing. Tony, I'm going to tell you something, man. I'm a supporter of all YouTubers out there. Like, I love content creators. This is why I watch, and I watch your show. I've even been on your show. And no, I can't tell you AMC is going to be a great investment because I know the numbers. Are you going to tell them that it's flat? Are you going to tell them that their quarter 2 is the lowest quarter 2 since 2005, or that quarter three was the lowest quarter three since 1996? Are you going to be saying any of this stuff to your guys? You're going to tell them, oh, it's on its way up. There is no on its way up. Anybody can go up from zero because it was completely shut down, and then it was opening up in stages in last year. And now this year, you're stuck. You're stuck from 1.9 to 2.3 billion dollars every damn quarter. This is what you're going to come out with. You're not going to come out with much more than that. So it's tough for you. I get it. And I'm not talking about you. I'm saying 1.9 to 2.3. Domestic total box office. This is not AMC number. I'm talking about the whole industry as itself is on a downturn. So that's what I'm talking about. But let's just go ahead and talk about the way you go over earnings reports with a negative touch. If you own GameStop, which you claim you do, which I'm baffled why you even own it, because you don't believe in it. Do you even understand what $177 million is on free cash flow? Free cash flow beats out anything you want to do, because that means you have more cash coming in than going out. And over time, it will trump whatever you're spending. And yes, it costs money to make money. And so we're negative $90 million, yet our inventories are up $200 million from January to now. We're going to come out here and we're going to kill it quarter four. And then what are you going to say in March? Oh, well, I told you guys to stick around. No, you never did. And you skipped the most important part. What else is new, man? Anyway, hey, all you guys who watch him, understand, he tailor makes his FUD for you. And you guys are buying AMC, and you guys are buying APE, and you guys are buying HYMC for whatever reason. Hey, $150 wasn't the bottom, Tony. $9 wasn't the bottom, Tony. $1.19 wasn't the bottom, Tony. Yeah, for all three of your glorious investments that you tell people to buy. Anyway, keep buying GameStop, I guess. Maybe you don't, maybe you will. Why would you ever stop? Can't stop, won't stop, GameStop. Tell them the truth. Tony Dinero, tell them the truth.